Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Tuesday, the 15th of June, 2021. Today, it's episode number 2014. Thanks for joining me here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So what do we have going today? Let's jump into the pre-market summary sheet brought to you live and in real time. It is updating live right here. You may see things flicker and so on, but I'm not sure what that is. But overall, we have a mixed kind of mild risk on market today. The market continued higher as expected after a neutral extreme up day yesterday. Mild risk on. Overall, the S&P has traded 157,000 contracts. It is in a balanced profile with 86% of the inventory long, as you can see here. And again, it's updating live. That's why it's kind of doing that weird glitch. It's because of the broadcast, the screen refresh actually. So that's where we stand. 15 points of range so far. The leader today is is crude oil again. Crude leading the pack. Copper getting hammered, down 3.73%, followed by silver, which is down almost 1%. The leader in the index world is the DAX, the German DAX, followed by the Euro stocks. You can see here the S&P slightly higher than where it was yesterday, where it closed yesterday. Same with the Dow and the NASDAQ, slightly lower. The NASDAQ led that pop higher, new all-time highs in the NASDAQ yesterday afternoon, dragging the entire index complex up with it. In what was a pretty interesting rally, about 23 points in the S&Ps on pretty good volume, 23.5 points in fact. So that's where we stand. Again, I want you to take note of the harmonic rotations in the gray area right there. 4.25 points for the S&P. We're looking at about a 4-point stop, 4 to 4.5 point stop on 1 minute rotations. The NASDAQ's about 19.25, Russell 4.3, and the Dow 34 points with crude at 0.2 or 20 cents. What's driving things today? Today, really, it's about tomorrow's Fed meeting. The Fed has to balance inflation with jobs. It's going to be a very interesting meeting tomorrow. What's going on here? It's going to be a very interesting meeting tomorrow, very important. The big question in front of the Fed is how transitory is inflation. The inflation is expected to be transitory, and therefore we're not seeing the kinds of moves in the treasuries you would expect to see with inflation at 5%. As reported this past week. So, you know, we want to see what they're going to say about that. So there's a lot of emphasis on this. Tomorrow's FOMC meeting is going to be very important. We're likely to get a lot of volatility, and the market is likely to reprice quite heavily based on that announcement. Again, Wednesday FOMC meeting. The other thing is the trade deal. The trade deals being done by President Biden with the Eurozone. This morning, they announced that the entire dispute, the entire dispute between with France regarding its subsidies to Airbus versus the U.S. and Boeing, is going to be set aside by the United States in favor of taking on China. So these trade deals that are occurring in the EU right now are really targeting China's government involvement in industry and what they perceive to be anti-competitive behavior. We're going to see a lot of this year. And then, of course, there's more news out of the infrastructure deal in Washington, which, again, is more money being pushed into the markets. In about 8 minutes, we're going to get industrial production. We have business inventories at 10. We have the NAHB housing market index, and the housing market's been very, very, very hot here in the U.S. And then right at the close, we have the net long-term tick flows. And then the crude oil stock change, the API crude oil stock change after the close as well at 4:30, 15 minutes after the pit closes, and then Japan announces its balance of trade and exports at 7:50 p.m. That's where we stand. Bitcoin's back above 40,000 as Tesla announced that it would start taking Bitcoin again for payment, accepting Bitcoin for payment, as long as it demonstrates that it's been mined with clean energy. I don't know how they're going to do that, how you differentiate Bitcoins. I'm not sure. I don't know enough about that. But overall, the crypto complex has been going higher. Things are going pretty steadily higher over there. So that's where we stand. Let's take a look at what was expected yesterday versus what we got yesterday. The expectation, the primary expectation, we were opening in range or just slightly at the top of Friday's range, in value against the point of control. The expectation is sideways movement, an attempt to push the high at 40, and then just drop into the 30s and go sideways. The secondary scenario 2, is drop down into the 29, 28, potentially 25 area. 25 is key here. 25 is relatively important down here. You can see these fights at the 25. The 25 is relatively important, but I drew on here that we pushed to around 28, 29, consolidate, push up into the close, mostly sideways. Again, there's a lot of control right now through the roll, and the expectation is the market is likely to continue sideways, so we have to adjust for that. Remember, it's not what we desire that matters. Nobody cares what you think the economy, the Fed, or whatever wants to do. I know you've been told that you're special all your life, but the market doesn't think so. It cares about prices and valuation and how much participation of price, and that's why we use volume in combination with a price to see how much of something is being accepted or rejected. And so overall, yesterday I was looking for it to go sideways. The rally on the close was a surprise. Let's take a look in our review segment how things shaped up. So here we open in what looks like a drive down. Okay, we open in what looks like a drive down. We push back up into 36, and then we continue to break lower. We put in an opening swing here at 30.50. And then just consolidate around there. We breached the initial bounce low down into 25.75. Again, 25 really important in this area right here. Push back to mid, consolidate, and then it takes off. And what we end up with is a 23.5 point rally straight up on really good delta, really good prints here. I'll show you what it looked like on the footprint. Some pretty heavy volume. Look at that thing. Pretty heavy volume. These circles, they actually show up a little bit different on Edge Pro, on the Edge Pro X platform. But these circles represent 100 lot or better. And the number in the circle is how many of them occurred at that price. And so, is my sound too low? Can you give me some feedback on my sound? I thought it was adjusted pretty well. It looks to me like the sound is pretty good, but I can never tell. Let me know if the sound's too low. So anyway, these circles represent 100 lot or more. We get a circle per 100 lot or more, and the number that's represented is how many 100 lot plus prints occurred at that price. So whether it's a 1,500 lot or 101 contracts or exactly 100 contract, we get a circle with a 1 in it, and if it prints again, we get more the number of times that it actually did that. And you can see there's a fair amount of participation here. We get a delta that's higher than what we've had all day on the positive side. Now, the catch here is the delta is not really representative this week because of the roll. The roll skews the futures volume because a lot of volume is just rolling. But the delta here is pretty good. And then we see that on the closing bar, despite these massive sell and buy prints, we end up with a delta of 12,000 contracts at the peak with very small pullback. There was a lot of volume buying into the close. And while we did that, so we pushed on this bar here, we pushed to the IB high, which is right here. The IB high was 42.38 even. We pushed right one tick beneath it. That is a bit of an impulse move. And then we have this beautiful bar. Look at that bar giving us a long breakout entry point. And boom, we get the bar again, inside bar, long breakout entry point, and we end up squeezing into the close on really explosive volume and continuing higher. And then, as I indicated in the Convergent Trading Head Trader channel, this is likely to continue higher. And it's just it was just a kind of a boring trade all day until that took place. So what we end up with is a break of the IB low and then a break of the IB high, giving us neutral. There are two types of neutral. There's normal neutral and neutral extreme. Neutral extreme is really more often than not represents a change in sentiment, a strong change in sentiment. And we ended up with a neutral extreme closing at the extreme. The only catch here is that the point of control remained at the low of the range. The point of control stayed quite low for this session. So point of control around 42.2875 down here, and we ran away from it. And remember yesterday I said we're building this balance up here. This is a double distribution, but we're building balance down here. And yesterday when it came back into this balance, I said, I looked at it and I thought to myself, okay, there's not going to be much for me to do here today. So I had 0 trades yesterday. I was not here for the break higher. 0 trades, but we ended up finishing near the high. And what we had throughout the session was a long liquidation profile that finished near highs. This is likely to drive higher in the overnight session. So let's look at the overnight session. Here it is on the 30-minute bar chart. We open right back up, consolidate on the Asian open, and then immediately take out that high. This is fully expected. There's a very, very high probability that there's a continuation in buying, as I said. And we end up with a pretty balanced profile. It moves to where? It moves to the 42.59 measured move. This is the next measured move. It gets to 58.25, just 3 ticks off, and then comes right back to 42.50. 42.50 had that big size. If you have a heat map, and we're monitoring the heat map yesterday, we had about 800 contracts on the 42.50. I did post this CT bulletin. I didn't tweet it out, but it's on the CT, the Convergent Trading YouTube channel. I posted the CT auction bulletin that I did in the afternoon to talk about how the close is shaping up. And I said that the 42.35, where the size was, is likely to attract price higher. My expectation wasn't that it would blow through and we'd get a 23-point move, but we saw that size sitting there, and it traded through at 42.50, and that's where the overnight point of control is. The market is structured and organized. We want to see the auction organized. We want to see lack of tampering by tweets and government action and news and so on, so we can follow the auction and we can exploit our edge that way. I love volatility, and the news creates volatility, and I don't think I've ever traded without news. Not for one day, I could safely say. But lack of news also gives us a more clean auction, and that's what we're seeing. So 42.50, and now 42.50 is above us. We're trading right here at 42.48, leaving the overnight point of control above us, but also leaving the full session mid, the full session VWAP right above, and we are moving ourselves back into yesterday's range. We're starting almost like we did yesterday. So the question is, given that it's Tuesday, historically one of the most volatile days of the week, the question is, what does it do on the open? On the market on open trades, will they bring sellers in to take us back to the 28.75 point of control? Do we push down into the single prints at 42.38 and a quarter? How do we respond on the open? Do we squeeze lower and we are responsive? In other words, we're coming back towards the auction, or do we try to pull back and then we get buyers pushing the overnight high? We still, the overnight stat is beneath us at 42.43 quarter and above us at 42.58 and a quarter. Which one of those goes? So today, very close attention to how it opens and how the auction progresses to the downside. If there's no progress to the downside, then I'm looking to lean long. The problem with yesterday's auction is that there's not much to lean on long. Until we get into the 42.40 and 42.38 quarter area. So we'll see what happens when it happens. Let's take a look at the composite. Remember, I'm representing September here in these charts. What have we done so far? We have remained above this 42.19 MC or microcomposite point of control that we created last week. And last week did a great job staying above the microcomposite point of control created in the prior 2 weeks, overlapping. And so it's quite bullish still. So as we pull back, all we can do is consider that the market pulling back is really an opportunity for buyers to buy at lower prices, and it's up to the buyers and the volume at those prices to tell us what they perceive as value. So from an auction perspective, from the one-time framing perspective, the weekly is one-time framing up. The daily has been one-time framing up. There's really no reason for a structured short. Shorts are scalps. We're just looking for a handful of ticks, a couple points maybe on the short side. And for the shorts, I'll tell you what I need. I'm sure you're curious. What do I need to take a short? I'm looking for it to remain below the low, the open. I'm waiting. I'm expecting distance between where I'm entering to the next key level, which again, 42.38 quarter, 42.28. 75, the point of control, and 42.25. I need to have pretty good distance there in order to take a stab at a short. And the most important thing, and this is really, really important, the most important thing is if I take a short, my target had better be a multiple of my risk, because I cannot afford to take a short that'll only pay me 4 ticks with 12 ticks of risk. I'll go out of business taking that trade every day. I'd go out of business very, very quickly. So I need that distance. We need to stay below the open. We need to see an attempt higher that fails at the open, and then it pushes lower, an impulse, a wider move lower than higher. Then I'm starting to get comfortable playing the short side. But even if I did, I'd be looking for shorter distances to targets. In other words, scaling out quite early and things like that, because I'm going against the flow. Now, if we have a 1.5–2% selling day and it looks like it just has no power on the buy side, sure, we could start looking at structured shorts. But for now, shorts, the permanent bears have been getting pummeled for years now. And opportunities to get short or to be short pay off. They pay off pretty well, but they don't last very long. So you can't really stick around. Let's take a look at what's expected for today. By the way, I want to remind you that tomorrow at 4:30 Eastern, I will be doing a live webinar open to everybody on building an edge in a new product. If you're looking to trade a new product, if you're moving into, say, the new micro crude contract, if you're looking at micro Bitcoin, if you're just looking around, hey, maybe I need to move from the ES to the NASDAQ because volatility is getting sapped or whatever, we're going to walk through the process, the key elements that are needed in order to consider trading a new product. Again, 4:30 tomorrow. To register, go the number 2 ct.pro/new-product-edge, all lowercase. This is also on my Twitter feed, on Convergence Twitter feed, and it's also included in the description of the YouTube live stream that you're watching. So just register if you wish to get a copy of the recording. Then you would want to register even if you cannot attend. And no, you will not be spammed. All right. So what are we looking for today? By the way, once we took out the 42, I want to show you this for a second. Once we took out the 4250 yesterday, we took it out with pretty good size. We still have, the overnight point of controls right here at 4250. We have repeated block trades going off in the 4250, 4250 quarter and 4249.75 area. You can see these block trades here, block offers showing up. From there, we're relatively clear above, and below it's been pretty poppy in and out. There's not much. And again, we have these single prints at 38. That's the next key support area that I'm looking for. So let's take a look at what's expected for today. Let's turn on our stock zone levels and get you guys on your way to trading. Here's yesterday's high, right? And here's where we are, right against yesterday's high. I'm looking for an open auction that makes an attempt at the full session VWAP at 4251. I'm expecting it to attempt to push above 4250 is the overnight point of control. I'm looking for that to fail, and I'm looking for this thing to dig in to yesterday's range and to move towards 42.38 1/4, 42.38 1/4, the single print here, and it brings us in line with the prior week's high. So 38 1/4 here, looking for those singles to be filled back in. Given the structure overnight, given the balance, and given the extreme that was put in the overnight session, nice little taper here, I'm expecting it to test lower, consolidate, and then later on come back to 42.50. The 50 continues to be important here, and we have size at the 50 overnight and currently. So that's scenario one, is a dig deep, look for value, look for buyers, advertise for buyers, find the buyers later in the session, turn around and move back up. Secondary, open auction that pulls back into yesterday's range, breach of the overnight low at 43 and a quarter, consolidate in the 43 area. Then we have an impulse higher, consolidate around the overnight point of control, and start moving towards this 59 measured move. This zone here has multiple measured moves, pretty formidable resistance between 59 and 69 expected. These are projected numbers. They're not based on a previous auction, but we're likely to get tangled up here and consolidate up here if we get into these zones. The longs we want to be very considerate of the fact that there are stacked levels there, even though they're just projected levels. They're not based on past history. Those are the two key scenarios. Again, we're opening on the edge of yesterday's range. Keep that in mind. And the most important thing we want to see this morning is the market responsive? Do we open and then we are just sell? And if we do, how does price progress on those sales? And if it starts to find support through icebergs or its inability to move lower, then I would consider jumping on the long back into 42.50. That's the key thing I'm looking for this morning. If we open and run, then I'm hands off and I need to see what it does the overnight high and against those measured move levels. I know that's a lot to digest. Good luck today, and I hope you learned something today and you gained something that'll help you in your trading. Good luck. Cheers.